Recently, one of my friends, after talked to me and about uh, investing, stock market investing, and he decided to open a trading account. He's a young guy, around 25 years old. So he decided to open a trading account, and so he went to a TD Bank branch. So obviously, they opened a trading account for him. But what happened is, it took about like 15 minutes, to fill up all the forms to open the application for open a trading account. However, uh, the lady who helped her open the trading account, spent almost 45 minutes try to convince like this young guy to put his money in a TD mutual fund because you know she asked, why do you want to open a trading account? And the young guy said, you know what, I want to do some investment and for my future. And she asked, do you have any idea what do you want to invest? And the young guy said, you know what, maybe I just invest in TD stocks. Then the lady said, you are so young and maybe you should consider TD mutual funds, and this is more balanced, secure, and safe way to invest, blah, blah, blah. And spend almost 45 minutes try to change the young guy's mind. So at one time I talked to some friends and I said, in any TD branch office, any TD financial advisor will never ever recommend TD stocks to you. I want to explain why. Okay, let's give you one example. For the past 10 years, okay, 10 years ago, the 2008, this 2008 was the worst time to invest money in the stock market. So let's say you invest $10,000 to purchase the TD stocks in 2008, which was the worst time for investing. And today, you will have around $33,000. So it's up more than 200%. Then let's look at one of the mutual funds managed by TD Asset Management. I'm looking at my iPad, and you can see this is it's called TD Dividend Growth Funds. This is one of the mutual funds managed by TD Asset Management. So I look at the 10 years performance. It's about a 6.01 annual return. So it's around, after 10 years, it may be up 80%. So the TD Bank stocks up more than 200%. And the mutual funds is up 80%. So obviously the TD Bank stock perform, the return is much higher than the TD mutual fund. Actually, when I before I start recording this video, I try to find one mutual fund managed by TD Asset Management, and the first one I found is it's called TD Canadian Equity Funds. The 10 years annual return is 1 point something. So after 10 years, you may up like $1,500, something like this. So this is only like, think about the TD Bank stocks up 200%, and this is only like 10, 15, maybe 15%. So the question is, why the TD financial advisor, they don't want to recommend the TD stocks? My guess is that maybe, by law they cannot recommend yourself. Say, oh, I'm a good, I'm a bank and I recommend myself. Maybe by law they cannot do that. But I want to explain it from the other perspective. See, when you, let's say if you are a manager of any bank branch, it doesn't matter TD, Royal, BMO, Scotia, or CIBC. It doesn't matter which bank. So if you are the salesperson, that you are the manager, you are the salesperson, and your customer come to you and say, I want to do some investment. If you recommend your own bank stocks, and there's no commission for you, because the person who purchase the stocks, the bank stocks, will become your boss because they are the owner of this company, of the bank, and you don't get commission. Maybe for the $9 per transaction, that's it. But if the client put the money in the TD mutual funds, then, for example, the mutual funds we just mentioned, the TD, the dividend fund, they charge you more than 2% every year for management service. So it's more than 2. For example, if you have your $10,000, so every year you will pay $200 for a service. But this, in financial service industry, one thing is kind of interesting. You pay a management fee, but they don't guarantee or promise you will get a good return. The management fee just manage your money, but it's not related to the results, the performance results. I think that's a big problem. And however, all the salespeople and all the financial advisor at the bank who work there, they get commission on that. So I always try to tell my friends, if you can learn how to manage your own money, you actually can save a lot just from the management service charge. For example, a typical middle class, maybe you have $250,000 in investment, and if the bank or other financial institution manage your money, they charge you 2% a year, then this is $5,000. And don't forget that this is every year, so you have to pay every year $5,000 just to let other people to manage your money. But I have to say that overall, the mutual funds performance, it doesn't matter the TD or any other company, the overall performance is not really good, because normally it's between 4 to 8% a year. And think about the mutual funds I mentioned. Another mutual fund I mentioned, the TD Canadian Equity Funds. It's only about 1% a year. 1% a year. I mean, even lower than the GIC interest. So this is something, that's one reason I want to encourage my friend. I always tell them, try to do something for yourself. Try to learn how to manage your money. Honestly, I talked to at least 30 people, and none of them actually take any action. They have never read one book and never spent any time to think about how to invest. Never. Um, I don't know why. I mean, it's really even actually yesterday, yeah, there's a young guy in my office next to me, and because a couple years, 2 years ago, he asked me about how to invest money because he has some extra money. So I told him, if you don't know anything, just put your money in the dividend funds. So then yesterday he told me that, you know what, that dividend funds is really good. It always go up. Of course, because the Canadian index market is, the market index, is at the highest level. So obviously everything is at the highest level. So you look at the chart, yeah, it's good, good, good. But for 2 years, I talked to him more than 15 times. And every time I told him, go to the library to read the book. Or if you don't want to go to the library, just Google it, try to find some information online. When you have spare time, just study. And after 2 years, he didn't do anything. He didn't do anything at all. So I don't know what these young guys, what they're thinking about, and maybe they don't care about money, which I don't believe it. But you know what? When you talk, I told my friends, when you talk to your financial advisors, and honestly, every financial advisor you talk to actually just a salesperson, and they had no idea how to manage your money, and absolutely no idea how to manage your money, because the people who really manage your money have no time to talk to. Think about it. One mutual fund manager may manage more than $1 billion, and you only invest maybe a couple $1,000 or maybe $50,000, but he takes care of the $1 billion asset. How much time he can give to you? So if you really care about yourself, care about your family, I really, really suggest you read the book, learn how to manage your money, because no one care about your money than yourself. If you don't care about your money, you will see.